XRPL, the payment system, the plan for GSR subsidy transfers via blockchain and even into fiat. From its inception in the 1970s, SWIFT was never a neutral global public good. It was a financial switchboard built by, for, and under the supervision of Western institutions in the US and Europe. RippleNet plus XRP was designed to break that dependency by providing a neutral, auditable payments solution. The story of SWIFT's origins equals a club, not a public utility. In 1973, 239 banks from 15 countries formed a cooperative in Belgium to replace Telex, a Western banking bloc standardizing cross-border instructions on its own terms. Governance and oversight were anchored firmly within the transatlantic financial sphere. Supervision was built in from Western central banks. Because SWIFT was incorporated in Belgium, the National Bank of Belgium was charged with oversight, supported by the G10 central banks, formalizing public sector Western influence over what was, in theory, a private member-owned utility. Neutral in name, but overseen by a small club of advanced economy central banks. Centralized governance and power. SWIFT is a cooperative under Belgian law. Shareholders elect a 25-member board of directors via national member groups. Representation is proportional to messaging volume, meaning large Western institutions, by design, wield a disproportionate influence. But messaging does not equal money movement. SWIFT does not move money. It transmits instructions across long chains of correspondent banks. Result: pre-funded nostro, vostro balances, multi-day settlement, opaque fees, and poor traceability, the opposite of real-time, final settlement. A neutral network used as a policy tool. In 2012, following EU decisions applauded by the US Treasury, SWIFT disconnected sanctioned Iranian banks, a geopolitical use of the network itself. That precedent revealed how governance and authority could be weaponized. By 2022, the lesson was unmistakable. After Russia's invasion of Ukraine, Western allies pushed Russian banks out of SWIFT in phases 7 initially, then expanded. Once again, the network proved vulnerable to bloc politics despite its neutral description. Today, SWIFT's slow march into modernization. Even SWIFT's modernization shows the inertia of legacy infrastructure. The transition to ISO 20020 to CBP-R+ only began in March 2023. The retirement of Mount Messages isn't expected until late 2025, a years-long slog from 1970s plumbing to a richer data standard. Neutral or not, SWIFT remains the old switchboard of the cabal trying to catch up. RippleNet, a different kind of network. RippleNet delivers real-time messaging, clearing and settlement via one API. On-demand liquidity (ODL), providing liquidity through XRP as a neutral bridge asset, eliminating pre-funded nostros and reducing settlement times to mere seconds. This is the movement of value, not just instructions. XRP Ledger equals neutrality by design. XRPL is architecturally neutral. XRPL is a public, decentralized blockchain. XRP is its native asset. Ripple's ODL uses XRP as an almost instant bridge between currencies, enabling final, auditable settlement, independent of geography, exactly what a block-free payment rail requires. Why does neutrality matter? A messaging cooperative overseen by G10 authorities can, and has, been weaponized geopolitically. By contrast, a neutral settlement layer with public verifiability XRPL and institutional-grade tooling RippleNet ODL reduces the power of gatekeepers and minimizes political choke points at the network layer. The transition underway. This transition is happening alongside infiltration, the good actors entering and reshaping the cabal's financial domain from within. As SWIFT drags itself toward ISO 20022 and fragmented payment routes, institutions are already experimenting with tokenized liquidity and real-time settlement. The faster global finance demands speed, auditability, and neutrality. The more RippleNet plus XRP looks less like an alternative and more like the final solution.